Would you take a look at that, guys? The markets are selling off today. It's about 120 when I'm filming this video on the East Coast. We have the Russell down 2%, the Nasdaq's down 1.9. We have the S&P down, 1.1, 1.2, as the Dow is down 0.6%. So we got to break the markets down in this video, and we have to break down some stocks, some charts, earnings, all that good stuff. But before we do, get your 10 stocks from Moomoo with a $100 deposit, link down below, and you could also get 12 stocks from Webull with any amount deposited. And with that being said, let's dive into the video, guys. So again, it's currently about 120, 125. We're about a little bit past midway through the day so far. And as of now, let me just be right up front with you guys. Let me be real. As of now, the bulls overall on the 20-day chart are still in charge. But we are noticing a little bit of a lopsided head and shoulders here on SPY. There's no doubt about it. We have the left shoulder, the head, the right shoulder, and with today's 1.1% down move as of now, we are now under both moving averages on this time frame. But we are approaching a higher low, or a point that could be a higher low if buyers do step in, as indicated here by the trend line. And to be honest, I don't think we're going to get that confirmation today. I could be wrong, but I think we're going to have to wait until next week to see whether or not we end up breaking out here, whether or not we see, selling pressure through this trend line. So we have to be patient. But as of now, lopsided head and shoulders under the moving averages. And, we're testing the trend. The bulls are going to be tested here. Same thing on Triple Q. The only difference is this is not a lopsided head and shoulders. This is more of a straight up legit head and shoulders, right? The neckline is at about 330.50, 331. We failed at that point yesterday and today pre-market, and of course, earlier in the month of August, about a little over a week ago. So right now, head and shoulders on Triple Q, and just like SPY, it is testing a key support level that could be a higher low here at the trend line on the 20-day chart, but it's too early to tell. To be honest, it's just too early to tell. So let me know your thoughts in the comments, guys. What do you think? If you all are finding value in the video, and if you enjoy the content in general, hit that like button. Make sure to subscribe. It really helps me out overall in the good old YouTube algorithm. And with that being said, guys, let's run through some stocks. Clearly, there's an outlier here on my watch list, and it's Foot Locker, ticker symbol FL. It is up 19, almost 20% when I'm filming this video, guys, and that's because they reported earnings this morning, and they did pretty well, at least better than, investors, traders, people were expecting because of this big move. Obviously, it's up 20%. So they did adjusted EPS of $1.10 versus 80 cents estimated. So adjusted EPS beat. Revenue came in pretty much right in line with the estimate. They did $2.065 billion versus $2.07, so a little bit, a hair under the estimate, but still pretty much right in line there. And total sales, this is not the best sign, and I guess the next thing I'm going to say is not the best sign either, but seems like investors are still pushing this thing up today, which is, interesting, but I could see the reason why because of, the beat of EPS, revenue right in line. But if we look at revenue compared to last year, it is down 9.2% from last year, but it is still up 16%, roughly a little over that, from 2019. So we are down year over year, but looking pre-pandemic, sales are up for Foot Locker. And I guess another negative thing here, like I said, comparable store sales. They decreased 10.3% year over year, which makes sense considering revenue struggling. We're seeing that drop. So, okay, I can see that. And as of July 30th, the end of the quarter, merchandise inventories were about $1.6 billion, up 52% from last year. And that's actually as we're heading into back to school. And what happens when kids are going back to school? A lot of kids, they get shoes. And where do they go? A lot of them go to Foot Locker, right? So they have a lot of inventory right now, a lot of retail, companies, whatever you want to call them, Target, Walmart. They've had, a lot of inventory, and a lot of the non-essentials. We're not going to get into that in this video, but they've been struggling selling some of their inventory, Walmart and Target, and I'm not sure if Foot Locker necessarily has, but they have a lot of inventory right now, 52% more than last year, and we'll see how the next couple quarters go. Are they going to have problem problem selling this inventory, offloading it. We'll see how the school quarter goes. First 2 quarters of the year here, heading into the school year. We shall see, guys. We shall see. So that's what we're noticing right now. And another thing worth mentioning is they lowered sales guidance slightly due to the foreign exchange pressures. Oh, and another thing worth mentioning is they got a new CEO. Ulta Beauty's old CEO, I don't know when she was Ulta Beauty CEO. I don't know what time that was, but her name is Mary Dillon. She was Ulta's old CEO, and Ulta is a pretty solid company, pretty solid company. So now she is the CEO of Foot Locker. And to be honest, if we're looking at the chart here, Foot Locker is a little overbought. It's completely breaking out. It's at a multi-month high, no doubt about it. Now it's almost at $40, but it's got to come down, in my opinion. If it comes down, retests maybe the lower mid-30s, maybe right by these moving averages on the 4-hour chart, in the next couple of days, weeks even, who knows, that could be a better entry point. But FOMOing into Foot Locker right now, although you guys can do whatever you want, I'm not a financial advisor, I'm not going to tell you what to do, I think FOMOing into it right now is a bad idea. So for me personally, I used to be in Foot Locker, sold out of it a while ago, made money on it, made a good profit on it, and now I'm looking at this like, maybe this is the opportunity to get back in. But on a pullback, we have to have patience. And I'm very confident that this will pull back. I don't know when, I don't know where it will pull back to, but I personally have confidence that it will. And I'm going to be looking at it low mid-30s on this breakout. Now, if it starts going back down to the low 20s, mid-20s, that's a different story. That's a technical break to the downside. But right now it's breaking out to the upside. I want to get a pullback entry on this breakout. So Foot Locker is crushing it right now. And to be honest, there's only a handful of stocks that are green today. Foot Locker, like I said, Merck, Amgen, XLE, which is an energy ETF, Tyson Foods, and Tencent, which is barely green. It's pretty much at break even. It could go red at any point. So it's one of those days, guys, one of those days where now the Russell's down over 2%, NASDAQ's down over 2%. But to be honest, this is something that we talked about, if I go back to SPY here, about a week ago. We were talking about, do you remember that bearish divergence that I called out here on SPY? I think it was right around, no joke, when it was at 425, 430. Hit that like button if you guys remember that, because we called the divergence out with the RSI, right? And since that point, really, it's been a little bit toppy. Maybe the day or two after it peaked, and now it's starting to come down a little bit. But again, like I said in the beginning of the video, the markets aren't completely collapsing yet. The technicals still look pretty good from a bullish perspective if we're looking at 20-day on SPY and Triple Q. But again, we have to watch out for this weakness and see if it continues into the close, or if we get a bounce into the close, which if you guys haven't subscribed yet, you got to do that, because we will be making another video later in the day, more towards the close of the day. So we also had John Deere today report earnings, ticker symbol DE, and this is barely in the red, but it is in the red nonetheless. They did $6.16 EPS versus $6.69 estimated, so they not barely missed, they actually missed by a big margin there on revenue of $14.1 billion versus $12.78 billion estimated. And I haven't done a ton of research into John Deere, but I have seen that they have been, now I think they're pretty much done, they've been raising prices across all their different products. And if you didn't know, this is an industrials company. They have a lot of products that you see with agriculture, right? Farmers use the big tractors, this, that, the third. I'm not a farmer. I've never used these before, but you guys know what I'm talking about. You've seen these products. They've raised prices all across the board pretty much, and that could be the sole reason. I don't know if it's the entire reason, but it's got to be a good chunk of the reason of why it is up a bunch year over year on revenue. Net sales revenues increased 22% year over year. Is inflation a big part of it? Probably. Is it all of it? I wouldn't say all of it, but there is demand for these products right now, 100%, and they're growing nicely year over year. But they did cut net income. It was $7 to $7.2 billion before. Now before it was $7 to $7.4 billion. Now it's 7 to 7.2. I mean, it's not that crazy, but they did cut the upper end of that range a little bit, and they did cut full year 22 industry outlook for U.S. and Canada agriculture and turf to up 15%. Oops, I just knocked the mic or the mouse, whatever it's called. Up 15% from 20%. So they cut that a little bit, but overall, decent report from Deere & Company. Their profitability is not where it was supposed to be for this quarter or estimated, but it looks like investors are forgiving them for that because the stocks pretty much at break even when a lot of stocks are getting destroyed today. And in the short term, I'm looking at this at about 370. I'm going to put one alert there, which was the high. It's been the high for the past couple of days here. So if we do crack above there on John Deere or Deere & Company, whatever you want to call it, there could be a big move coming to 370 or 80 rather. Then if 380 were to break, that is where the overall break could be coming on Deere & Company. So before we wrap the video up, guys, let's go through some of these stocks that are not doing so well. Foot Locker, John Deere, they're doing pretty well today, but some of these are not doing well. Let's wrap them up. Before we wrap up, let's talk about some of these stocks. So Tattooed Chef, let's just run through the worst here to the best. Tattooed Chef gave back pretty much all the gains. Now it's back under $7. It's down 12% on the day. Beyond Meat, I mean, this is getting destroyed, down 11%. Now back under the moving averages. That run up, as expected, was short-lived. Coinbase is down 11%, which is one that I was looking at earlier today, and it's just been going down, down, and down. It's just kept going down throughout the day, and right now we are at a pretty decent support level right by the 180 SMA here on the 4-hour chart. Voice crack, guys. You saw that. You caught that, right? Yeah, let's see if buyers step in here. I mean, right around 70, $75. Is this where we're going to get buying pressure? Who the heck knows? That's what I'm watching out for next week. What else do we have here? Snapchat's moving down. So pretty much Chewy, GameStop, DraftKings, Palantir, McCarter, Libre, Square, Snap, Shopify, Carnival Cruise Line, all those stocks I just mentioned, they're down 6, 7, 8% so far on the day. And then in the next tier of down, I guess you can say, big tech. We have PayPal's down 3%, Amazon 3%, Tesla down 2.8%, Google down 2.4%. Nike it's not big tech, but it's down 2%. Starbucks 1.6%. And then we have the basket that is down between 0.5% to 1%, maybe a little bit over 1%. We have Alibaba, Microsoft, Apple, Visa, JD.com, Activision Blizzard, all in that category. So it's just one of those days, guys. And again, we have to wait very patiently to see what direction we end up picking. So with that being said, if you all found value, hit that like button, subscribe, check out my Patreon link down below. And do not forget to get your 10 stocks from Moomoo with a $100 deposit. All of those could be valued up to $2,500, linked right down below. And you could also get 12 stocks from Webull with any amount deposited. Link down below as well. And with that being said, cheers, guys. I'll see you in the next video. Don't forget to subscribe. I'll see you later. Peace out.